Hey guys, this is Rudy coming at you live from Palm Beach in Florida. It is April the 15th. Today was Good Friday, so the markets were closed the entire day. It gave me some time and a little chance to catch up on some of my investment accounts and to kind of have a look back since I've been sort of laid off over the past couple of weeks or so. But one of the things that I offered to do when I made a last video was I said I would revisit Flex LNG. So I took a bit of time today just to capture a few slides and take a look at Flex. Now, I'll just say straight off the bat here that this is typically sort of not my thing, so if we look at the company and what it does, it's an LNG shipping company with a fleet of 13 fuel-efficient fifth-generation LNG carriers. When I say this is not my thing, it's typically not something that I look at, but the LNG transit companies or carriers that have been performing really well. We're going to look at Flex in a minute in terms of seeing how it's done over the past few months or so, and maybe we can figure out where it's going. A little bit about the company. Flex LNG was initially incorporated under the laws of the British Virgin Islands in September 2006, so it's relatively new. In 2009, we completed our initial public offering of our ordinary shares on the Oslo exchange under the ticker symbol FLNG. And then in June 2017, which is sort of just the other day, we re-domiciled the company to Bermuda. It's not unusual for shipping companies to domicile themselves in Bermuda. In fact, about 15 years ago, there was a huge outcry in Canada when the finance minister at the time, whose name was Paul Martin, who happened to own a fleet of shipping vessels, had his companies registered in Bermuda while he was the finance minister of Canada, which at the end of the day, from a business point of view, made sense, but optically probably didn't make sense too much. We transferred our listing of ordinary shares from Oslo Access to the Oslo Stock Exchange in order to increase our visibility to investors and to facilitate trading liquidity. And then in June 2019, really just the other day, Flex LNG was listed on the New York Stock Exchange, also under the symbol FLNG. So if you want to look it up, you can find some more information about the company there. Now, if we take a little dive into Flex, and here I've just used a variety of typical sort of US sources that I might start off with. This first screenshot is basically just Google Finance. And this shows us that Flex LNG hit a low sort of there at the start of the pandemic of about $4. It's currently trading at $32. This is in US dollars. So if you were lucky enough to time the market, you probably would have been very happy if you bought Flex at $4 and now it's trading at 32 to give you a bit of an 8-bagger. In fact, if you think of it from an Occidental point of view, you could have purchased Occidental at around about that same time for about $8 or $9, and now it's trading at $60. So as I've said before, we had a period during the early months of 2020 where you could almost put energy companies on a dartboard, thrown a few darts at them, and wherever the darts landed, you pick those as your investments. Over a 5-year period, the company actually looks probably arguably a little bit less better than what it looks over the sort of nearer term if you look back in the rearview mirror, because you can see for most of the period after it listed on the New York Stock Exchange, it was sort of hovering around the $20 mark, and now it's at $31, $32. So not a huge uptick in terms of the period preceding where we are today, where it's had this nice sudden rise. I look at the screenshot here. This is from TD Ameritrade. You can see the company is not necessarily a small company, $1.7 billion market cap. It's trading very close to its 52-week high. As a general rule, I don't like to get into companies when they're trading high, but sometimes when they're trading at their 52-week high, they still got to run, and they still have a way to go. So this is not an exclusive or a solitary benchmark. It's something that you should pay attention to in collaboration or in conjunction with everything else that you look at. Earnings per share, pretty good. The PE ratio, less than 10, indicates that it's even now at $32, relatively well priced. I wouldn't pay too much attention to this beautiful dividend here at $2.30, which is currently yielding 7.2% on an annualized basis, and I'll tell you why in just a second. I went to tip ranks. I only found one analyst rating the stock with a target price of $20. That's a 40% downside from where it is right now. So even though it's just one annual analyst, that's not necessarily a good place to be, even though the one solitary analyst says hold. So it's got a 40% downside there, but he still says you don't have to sell it. It's ranked 8 as on the sort of 1 to 10 outperform. It's quite a good ranking, once again, despite the target price of $20 and the hold on it. So make of that what you wish. But in terms of my typical US data repository and access, and in this particular instance, looking at TD Ameritrade, Tip Ranks, Google Finance, or whatever, I couldn't find too much information on Flex. So what I did was I went to one of my international portfolios and pulled up Flex again. Now, of course, to be fair, I could have gone to the Oslo Exchange as well, but the Oslo Exchange would basically feature the company's public filings. What I want to do is to tap into people who have opined on it for whatever reason, good or bad, and see what they say as opposed to what the company says in its filings. Now, when I go to my international portfolio account, I can actually find 8 analysts. 4 of them are currently saying buy, 2 say outperform, and 2 say it's a hold, which looks a lot better than the one analyst on TipRanks that says hold with a target price of $20. Yeah, I also found a very recent, April the 10th, so just 4 days ago, report from CFRA. Their risk evaluation is moderate. Their price, $252. And in case you suddenly get happy, because it's currently trading at $32, this 252 here is NOK, which is Norwegian kronen. And of course, the country of domicile is Bermuda. Now, if we look at the quantitative model drivers for CFRA, they're saying the valuation, they are neutral. Their recommendation is also hold. They say the quality is neutral. The growth is positive. I mean, you can see that in the graph. It's had a really good trajectory over the past few months. And actually for the last year or so, the street sentiment is neutral. And the price momentum, as you can see on the graph, is positive. Right at the bottom here in the corner, the risk evaluation on Flex, the asset and market size risk is low. The financial leverage risk is high. We're going to talk about that one in just a second. The price volatility risk is moderate, and the liquidity risk is low. So let's take a quick look here, sort of a very, very brief snapshot. It's just one slide of the income statement, cash flow, balance sheet data, and kind of see what this looks like. Firstly, from a revenue point of view, and here I'm covering a period of 8 years. So from a revenue point of view, I have not applicable, so sort of pre-revenue until you get to 2017, when they booked $27 million. Now, of course, when you book such a relatively small amount of revenue, it's easy to achieve stellar growth year over year. So going from 27 to 77 to 120 to 164 to 343 looks pretty good on paper. I mean, it's a nice upward trajectory in terms of revenue over the last 5 years. And prior to that, there was nothing to report. How about operating income? Well, they didn't have any revenue, so obviously whatever they spent in order to be operational would have just been a net loss. But then when we look at the last 5 years from 2017 to 2021, in terms of where we are now, you can see that the operating income started with a negative 12 and then went positive 29, 55, 75, and now 201 million. So the operating income, nice trajectory as well. Doesn't look too bad. It's on a nice upward curve and seems to be doing okay. I would not buy this stock for the dividend, as I said a minute ago, and I'll come back to that one in a second. The dividends per share were not applicable for 5 years running. Then they declared a dividend of 20 cents, 40 cents, and now $2.30. That is a huge jump from 40 cents to $2.30. Now, whether that's sustainable or not is highly debatable because we don't have enough history to work with. The dividend payout ratio, of course, is kind of the same. So we have 5 nulls or zeros in a row, and then suddenly 65, and then NM, and then 76%. So we'll see where we are maybe in a little while from now. And tomorrow is ironically quite a big day for Flex, and I'll tell you why in just a second. The free cash flow per share, now of course it'll be negative for the first few years, but it's still negative today. Cash and short-term investments shows you sort of what their cash position looks like, but then look at the total debt. Went from 7 million right now to 1.6 billion. Now, of course, ships cost a lot of money. And if you are leveraging and taking on debt in order to buy a fleet of tankers, but they are making you money, then, arguably that's okay. But the debt level has risen quite precipitously. And right now they are not in a comfortable position from a typical sort of quick ratio, current ratio point of view, with just $200 million worth of cash and cash equivalents on hand and total debt of 1.6 billion. And of that, only half is long-term debt. So many of those notes are going to be payable very, very soon. So I'm going to wrap it up here. If you guys have an opinion on Flex, you can share it with me. But I just said tomorrow is going to be quite a big day. But actually, this is February the 16th last year, Q4 2021. So this is from their website. So it's kind of slightly out of date. It's not up to date at all. Even the price is sort of there or thereabouts. They show you the price in Crude and in US dollars. But it'll be interesting to see what happens with Flex when they report the next quarter, and we can get a bit more sort of visibility and clarity in terms of what Flex might look like, and certainly whether it's investable or not. I have no position in carriers. Many years ago, I mentioned this before, I had a position in a similar company called Seadrill. The company almost went bust, which means my equity position in the company pretty much almost went bust at the same time. But what happened there is I kind of lucked out, and one of the owners of the company who had initially capitalized the business injected some cash into the business. And when he dropped a few $100 million into the business to rescue it, the stock price just spiked. And as I was watching the stock price spike, I put in a stop order at a sell price that was very close to my cost basis. So I managed to get out of the position without losing too much money. As Warren Buffett said before, rule number 1 is don't lose money. Rule number 2 is never forget rule number 1. That's kind of the motto that I live by. So on that note, guys, this is a wrap from me. And if you're invested in Flex, maybe you can let us know what the attraction is and what the compelling reasons are why you would want to put some cash on the table in Flex LNG. Right now, LNG is a good place to be, and it's been good for everybody who was invested, especially if you got into it in 2020 during the year sometime. So guys, let me know what you think in the comments. But on that note, this is Rudy saying goodbye for now. I'll talk to you soon.